Welcome into Boardroom Exclusives. I am Michele Steele. When we look at the landscape of retail investing today, the tools available to individual investors have gotten ever more sophisticated. And one firm currently leading the charge in this space is Tradr ETFs, one of the fastest growing issuers in the United States. And here alongside me is Matt Markiewicz. He is the head of, you can give yourself a promotion now, he is the head of product and capital markets at Tradr ETFs. Great to have you here.
Great to be here.
All right, so let's start with what investors want to know. Leverage products are powerful, but they aren't necessarily kind of a one-size-fits-all product. What type of investors should consider this kind of product, should consider leveraged ETFs?
Yeah, so I would say on the more sophisticated side. So it's not necessarily an ETF that you want if you've just started out trading or investing, right? If you're learning the ABCs and the basics of finance and the stock market, this is not really a product for you. You may grow into it eventually, but it is more for someone who can monitor their own portfolio on at least a daily basis and who has an interest in what's going on in the stock market, in the U.S. equities market.
Thanks for defining our terms there. It, of course, is about finding the right tool for the right objective as well. And traditionally, if someone wanted to amplify their exposure, they'd look toward borrowing or derivatives. But why would a trader, say a sophisticated investor, like you said, use leveraged ETFs over a margin account or, say, options?
Yeah, so if you're borrowing, that's using a margin account from a brokerage platform, those costs sometimes can be quite high. So that might not be a route that you want to go. You also can get a margin call. With a leveraged ETF, you don't get a margin call. What you put in is the maximum you can lose on the trade. Switching over to options can be confusing for some people. It's a completely, you say it's all Greek to me. Well, Greeks can be a little bit confusing for people, and unless you've done your homework and you're well versed in options, it can be a bit of a confusing landscape. So leveraged ETFs smooth some of that learning curve around getting, let's call it, amplified exposure to a certain stock or index.
Well, you've clearly found a resonant chord in this market. Tradr has raised, let me get it right, $3.5 billion in just the last year?
We've actually just a little bit more. We just hit $5 billion total assets last week. So we had a amazing
big 2026.
We had a big start to the month here in May in particular.
And correct me if I'm wrong here, the 2x long SanDisk ETF has already crossed the $1 billion mark since its launch in January.
In January, yeah, it's our fastest growing ETF ever, and I think right now it's the fastest growing single stock ETF in the marketplace, and we have just over $1.2 billion of assets in that fund.
That's impressive. You have quite a lineup, over 60 ETFs now. Which of your products are you most excited about for the next few months?
Yeah, so we just launched a Seagate Technology 2x long Seagate Technology ETF. That's STXX is that ticker, and that is from the storage giant Seagate. A lot of people kind of are very familiar with the story of storage and memory and how it's undersupplied to the marketplace. So really excited about that one there. Also a company called Firefly Aerospace.
Okay.
The underlying ticker is FLY. Our ticker is FLYT, giving you 200% daily exposure to Firefly. They do rocket launches, they produce tugboats in the sky, get you to the moon. So with the upcoming SpaceX IPO, we expect a lot of interest in space and space exploration stocks.
Yeah, we've talked to a number of CEOs of those space companies, and that SpaceX IPO is sort of, a rising tide lifting all boats so far. One of the biggest talking points around Tradr involves how you've solved sort of the daily reset issue, right, that scares off long-term swing traders. So tell us about those calendar reset ETFs and how do they work, and for whom are they appropriate?
Sure. So in the fall of 2024, we launched the industry's first, what we call calendar reset ETFs. Most leverage ETFs reset their leverage ratio on a daily basis. So that means you get 200%, let's say, the performance of Seagate for that day.
Right.
The next day, the slate's wiped clean, you start new. What we found was that a lot of investors were holding leverage products for much longer than a day. So they weren't day trading them or just holding them for a couple of days. It was actually closer to about 3 weeks. And when you start to own a daily leverage product over a longer period of time, you experience something called volatility decay. And that means the return that you think you're getting over the longer period of time may not actually materialize to what the fund is supposed to do, which again is a daily target. So we came out with these non-daily leverage ETFs. We have 3 monthly, so they reset their leverage monthly, and 2 quarterly, 2 monthly, and they are intended for people who have a longer term investing horizon. So a few weeks, a couple of months, so that you can stay in the position and not really be afraid of that daily volatility drag as the weeks go on.
You know, we've seen a massive spike in interest in single stock ETFs, or SSEs for short. Are there certain times when traders may want to consider using your SSEs specifically?
Yeah, so a lot of times we see peak interest in trading single stock ETFs around earnings events or news events. So if you really have a bullish thesis around a stock, the day before earnings, maybe a competitor of theirs reported a couple days ago, had a great report, the stock responded positively, and you think the same thing is going to happen to that peer stock. So you may want to leg into a position, kind of prep for a bullish move ahead of earnings. On the flip side, maybe after earnings, the company misses, in your view, the earnings estimate miss, revenue estimate miss. You know, it really probably isn't overdone, so you want to call it buy the dip a little bit, right? Take advantage of that weakness. So we see anywhere between a 3 to 7 time increase in average in volumes, trading volumes, when earnings are around. So I would say news and earnings, really good time to use single stock ETFs.
I'm glad that you brought up earnings, because with earnings season often acting as a catalyst for these names, I'm curious sort of where you're putting your own lens lately. You know, you mentioned Firefly before, and we talked a little bit about Santis, but what other trader SSEs are you focused on now, and why?
Yeah, so we have 2 rare earth stocks on which we have a single stock ETF. So it's USA Rare Earth. The ticker is USAX. So it's a 2X USAR. And then a company called Critical Metals, CRML is that underlying ticker. Our ticker is CRMX. And we're seeing a lot of interest recently, past few weeks, around those names, because it's a really small space dominated by a few players that are flying under the radar, relative to a bigger metals or mining company.
Yeah, you said under the radar. Everybody is watching sort of the big cap tech names all the time, but with 60 products, I'm sure there are some gems that people are missing. Are there more under the radar names, under the radar SSEs that you want people to know about, or that you want people to know, hey, these exist?
Yeah, sure. We recently launched a 2X long ETF on AXT Inc. AXTI is the underlying ticker. They manufacture the wafers that are used by semiconductor companies. So, and they fabricate different materials for the actual wafer. They don't do the semis themselves. So really interesting small cap story there. The other one that I would kind of think about would be, as I mentioned, Firefly, right?
Yeah.
That's one that, to me, given the interest in SpaceX, I think that's going to be, you're going to see a lot more interest in the space names.
And there still are some under the radar space names.
Yeah, again, it's a small cap company that really can't be on the radar for a lot of large cap portfolio managers, but for small caps, I think that's one to take a look at.
It really feels, Matt, like we are in the early innings of these structural tools that are changing the way that people trade now. Looking at the growth trajectory from here on out, and I know 3 years can be a lifetime in the macro landscape and certainly in these markets, but where do you see the SSE landscape, say, 3 years from now, looking forward to 2029?
Yeah, I could see easily us having a triple amount of products, close to 200 single stock ETFs. We were the pioneer in the single stock ETF space. We launched our first single stock ETFs in July of 22. So, since that time, coming up on almost 4 years, we've launched 60 products, so I can easily see a double or tripling. But a lot of it also depends on how the capital markets behave. Are we going to see a lot of new IPOs over the next 2 years? Generally, people are thinking yes, right? We're going to see mega cap, behemoth companies coming to market, SpaceX, Cerebras, Kraken, Anthropic. So that's really going to help ignite the interest, I think, for further products, as well as a lot more small cap companies that come to market.
Well, this has been a fascinating look, Matt, at the evolution of the ETF, and thank you so much for joining us to pull back the curtain on these products. Really appreciate it.
Thanks for having me.